All right, so today let's dive into ETF and the probability of maybe an early Christmas present, and that is an ETF possibly by November 2nd. That's right, just a few days away. And of course, happy birthday, Bitcoin, October 31st, 15 years ago today. We're going to talk about all that stuff, break it all down for you guys. You're going to love it. My name is Paul Barron. Welcome back into Tech Path. Let's get started today and let's talk about our sponsor, and that is iTrust Capital. If you guys are going long term on some of your holdings and you want to do it in an IRA, this is the time of year that you can start doing some tax planning, obviously, as we get closer. And these are the things, obviously, you should be checking with your own tax planning professional, but this is one of the options you can use. And of course, you can get into Bitcoin, Ethereum, as well as gold and silver. A lot happening over there on iTrust. 7 billion in transactions, 200,000 accounts created. So check them out over on Trustpilot. So got a good stuff for you. You can get additional $100 funding reward by just using our link down below. So check it out. All right, let's go into a couple of topics, and I'll start with Lynn Alden. This is a tweet from Lynn talking about the Treasury and what we're going to be expecting overall, expecting to borrow nearly 1.6 trillion over the new debt during the next 6-month period, covering the quarter and next quarter. This is kind of the breakdown for it. Let me kind of zoom out on that for you. This came out of the U.S. Department of Treasury. And the interesting point here, when you look at that, during October, December quarter 23, we're going to get about 776 billion in privately held net market debt, and then by assuming an end of December cash balance of about 750 billion, and then borrowing, the estimate is 76 billion lower than announced back in July. So I guess that's good in a sense, but January to March, which is first quarter next year, they're going to come in and borrow 816 billion. So that's where we get into some pretty significant numbers here. And this, of course, plays into a lot of the overall market strategies and why an ETF is so important, because we may see more and more institutional capital look for flights of safety instead of the US dollar, instead of bonds, US treasuries, possibly even money markets, and going into ETFs. So that'll be the thing to watch pretty closely here. Another thing too, right here from Kobayashi, Fed members saw long-term interest rates around 2.25 to 2.5. Now we're seeing a sharp move higher. This is a big deal. Fed funds rates now expecting around 3%. So that in itself is a pretty big issue. And I'll show you a Squawk Box video here in a second that breaks down some of the trends that are starting to align with the Fed. We will be doing a live stream on the FOMC meeting, breaking down some things with whether or not we get a rate increase. But really, as you guys know, what I like to do on those FOMC meetings is really understand the engagement between Chair Powell and the reporters at the end, because that usually gives us a lot more insights to what the Fed is thinking. Let's go over to the Squawk Box video. I want to start with this one. Listen in.
To the CNBC Fed survey are pricing out any future hikes, but extending for even longer the time that the Fed stays where it is now at its terminal rate. Steve Leisman joins us now. Hey, Steve.
Good morning, Joe. Yeah, while respondents to the Fed survey expect no additional hikes, they have now fully embraced the higher for longer mantra from the Fed, to the point where no rate cuts are expected until now the third quarter of 2024. Here's the Fed expectations chart from the Fed survey. 100% say rates will be unchanged this week. 5.29%, that's the peak rate. They hold there for 10.4 months until September. It had been July. It had been even earlier surveys suggested the Fed may cut at the beginning of next year. That is now September 2024. The 31 respondents, they include economists, strategists, and managers, fund managers, are divided on the outlook. 42%, they put a 42% probability on there being a soft landing and a 49% probability on a recession. Interestingly, that is now below 50%. On the outlook for the funds rate, here it is. 538 is the current number.
I'm going to pause it there and kind of jump in on this, because what they're getting at on the higher for longer. But the interesting thing here is how they're playing this out. And I wanted to freeze that frame because there's a couple of charts here to kind of look along. The current at 538, these are Fed funds rates, down possibly to 542. Some people looking at this maybe as up, maybe as a possible rate increase before the end of the year. We'll see. And then December of 24, that's how far they're pushing this out before we'll start to see a sub 5 number. And then, of course, December 25 could be the year of the opportunity for the Fed to pivot. Now, that is a much longer analysis than what we've seen in the past. Further in the charts that they're showing here, let me kind of scan through here. there was a couple more that I wanted to kind of break into right here. Inflation outlook. This is another one that is interesting to me. 365 currently for 23, down to around 2.86. That's their target forecast right now. This was a Fed survey, but 2025 still not hitting their target rate of 2%. So it's going to take some time to get there. And then when you look at this outlook right here, which is the one that is a little bit concerning for me, at least on the GDP, and that is going from a 2.42, which we had a strong GDP here just this recent month, and looking at a 0.73 growth. So very, very soft 2024. This is where we will start to see, I think, liquidity coming into the market for potential rebounds in many of these categories, especially around crypto. So this is another opportunity where we'll get a chance to see some things happen, I think, in early 2024 to mid 2024. Now, granted, we're already starting to see some things happening right now in a big way. And part of that is in relation to the ETF. We've already seen Bitcoin fly up to 35K just on the hint, the sniff of an ETF. Where will it really go as we start to go forward? I wanted to jump over to this article, and this was in reference to possibly the SEC greenlighting a spot Bitcoin ETF November 2nd. This is a lawyer, Scott Johnson. We've been covering him for a while, and he's from Davis Polk. Now, he hits on a couple of points here. His tweet brought attention to an upcoming closed-door meeting scheduled for November 2nd, and then he also remembers that there were leaks of the closed meeting ahead of the BITO launch, which he added. Now, that's the interest that he's pulling to it, meaning closed-door meetings usually indicates there's something up. There's usually something in the wings. Now, does that mean that we could see a November 2nd approval? That's the big question. That's where Johnson's kind of leaning. A couple other things I want to hit on right here from James Seifert, just as an update. This is Valkyrie, of course, joining the prospectus amendment train for their spot Bitcoin ETF. So again, this is just more and more fuel to the fire of an approval likelihood, which I think continues to climb. I'm sure that Balshunas and James are both putting this well over 90% for end of this year. I know that Eric was holding it pretty heavily. Empire Strikes Back, active ETFs take 21% of the flows, account for 73% of the new launches, up from 5 and 25 years ago. So that just shows you why this is so important to companies and investment firms like BlackRock, is the amount of opportunity here in terms of revenue and profits. This is going to be a big deal for many of these funds, including Fidelity and, of course, ARK. We'll see with 21 shares. Other things playing into this is Bitcoin versus gold. How do those things play out when we continue to see pressure on the market? Now, ironically, back on the Squawk Box interview there, you saw that the possibility of a recession actually dropped below the 50%. It was above the 50% for quite some time, dropping below. Remember, though, I'm always skeptical of these things when we start to see many of our government agencies and our government analysts give us this kind of data, because it usually, unfortunately, is wrong. And that's the thing that we got to keep an eye on, because this is where it's going to lean into Bitcoin and gold. And if you look at Bitcoin over time, a couple of things to kind of compare here. Inflationary environment of the 70s, gold achieved unprecedented growth, surging over 1,000%. Obviously, Bitcoin didn't exist back then. But it does raise the question on whether Bitcoin could potentially outperform gold in the same manner that gold has outpaced equities in 1970. So I'm going to throw up a chart here in a second to give you guys kind of an idea of where Bitcoin and gold kind of flow, but it is something to be aware of further into it. So it's definitely a chart here just kind of showing you the ranges here between around 1970 all the way through this period of time where it really took off there in terms of growth. Warren Buffett also has invested ironically, into a crypto-related stock, and it's beating his own Apple and Amazon, which is his kind of highly coveted stocks and securities. But this, of course, is New Holdings, which he invested. Berkshire put $500 million in New Holdings in June of 2021 and raised its stake by another $250 million in December of 21. So interesting things happening out there in the traditional investment lines. So are crypto investors in for a big 2024? Now, VanEck, we did a full report yesterday on the whole Solana. I know we had a lot of comments. Thank you very much. We didn't make that, make that up. Those were numbers right from VanEck's reports. But it's an interesting point because VanEck has been in, I would say, I won't say accurate, but they've been on point with some of their investment calls over the years. Some of the things they hit on in this article, near the end of the Fed cycle tightening, we're certainly closer to the end than the beginning. Now, with that being the case, and also with the Fed saying that maybe we don't see a reverse or a pivot, slight pivot, till now what looks to be the second quarter, possibly third quarter of 2024, I wonder if VanEck's position is still the same. If one is cynical about the election, then you would want at least 6 months for lower rates to kick in. I don't know that that's going to happen. With the pace in which we're seeing the market, GDP, job growth, and then also just inflation of where it's holding, credit, even though it's declining, we're seeing more and more. I just saw this number yesterday where the amount of interest that Americans are paying has doubled in the last 6 months and is estimated to double again in the next 90 days. And what I mean by that is the amount of interest that you're paying out of your regular income towards whether it's credit cards, car loans, those kind of things. All of that continues to climb because of the climbing interest rate. So that's the big question mark of whether or not the political environment can get a kind of a reverse on what's happening in the economic environment at the same time. VanEck also points out to the SEC recently approved ETH futures ETFs, a potential model for spot. And then they said, listen, we don't want to give anyone an issue or an unfair advantage. I think that goes back to the point that we'll see a lot of them approved at the same time. It's really the first time in ETF history where something like this, of course, has happened. And then globally, everyone has their eye on the SEC. Granted, there are many things happening on the global front, but, and I've said this many times, when the U.S. decides to get in this game, that's when the party starts. And it's just because of the amount of investment capital that is here in the global reserve capital of the world. So I think this is a thing that we will continue to see going forward. A couple other points I want to hit on right here. Crypto bull run fueled by regulations, back to the point that we talked about. And there's a couple of things that have kind of gone in this direction. I think the next push is already happening. This is the MiCA push. Let me kind of zoom in on that for you guys a little bit. Huge thing. It will unify the market and set clear rules. That's obviously going to happen in Europe. Regulations, however, are the potential change for the narrative and could spark a new wave of adoption. Now, this is an interesting thing because remember, the EU is the MiCA regulation, but you also have all of this happening in the UK as well. And the UK has been a little bit more strict on crypto and blockchain related companies, but I think things are changing. There was a tweet here I want to hit on that kind of gets into it. This was a nice thread if you guys want to go check it out, but this is talking about the UK government just dropped a bombshell with their final crypto regulation proposals. Some of the things they were hitting on I thought were interesting. Regulation will be phased in, legislation for fiat-backed stablecoin to be introduced in early 2024. That is much faster than I anticipated, especially coming out of the UK. Further into this, regulations will cover crypto activities, bringing them under the oversight of the Financial Conduct Authority, the FCA. That's another area that's going to be considered. And the point for me, at least I look at the UK, because the UK is one of our biggest allies, if not the biggest ally. And the likelihood of us seeing this kind of activity putting some even more pressure than the EU pressure that we saw from MiCA onto US lawmakers, I think will be a big deal. Let's not forget, of course, Gary Gensler. I've got a tweet here for that, but I just wanted to jump over to Bitcoin. And we're on the 4 hour, but I do want to show you guys something here. Let's squeeze this down a little bit. You can kind of see this nice growth here on Bitcoin over the time. If you go back all the way to mid-October and see that growth there, and I'm going to compare this to gold because I know everybody's been kind of pushing on that. There's that 30% move. This is really unheard of when you think about this in the land of Bitcoin. Let's go take a look at gold real quick, almost in that same zone right here around mid-October. We'll come in right here to October 12th. And right here we are on this spike down around 6%. So in short term, yes, but when you start to scan out on the daily with gold, that's where it gets kind of interesting because of this rise that we've seen back here all the way back into November of 22 as to where we are right now. So I don't know, maybe it's one of those that you could hedge, but I still think Bitcoin, if you are looking long term, but if you're wanting gains, then I'm looking at other assets. Obviously, Solana is one that I'm big into. I also see Ethereum. And then there's a lot of other altcoins that I think still have some potentials. But Bitcoin is going to have a retracement. I do feel that is going to happen. And if I just look at sentiment in general right now, we see a lot of overheated. Granted, the move still on ETF, if we hold above the 33, 34 range, a move on the ETF could take us into the 42 range. So it still could still be a play for you guys from a strategy standpoint. Of course, Gensler comes out and does the unthinkable. He tweets, and when he tweets, there's usually something behind it. He doesn't just do this. Now, granted, yeah, it's Bitcoin's birthday, but I love his last statement. Don't love it, but it's always so classic Gensler. Any crypto companies that are tricking investors should start treating them to compliance with the securities law. Who writes this stuff, man? Who writes this stuff? And of course, this was even better. I loved what Udi responded. Thank you, Solana. You got me feeling like a queen. All right, anyway, that's just fun. Fun, but yet serious at the same time. So anyway, you guys want to drop some, of course, comments. Give us your thoughts on where ETFs are moving here in November. Do you think we'll get one before the end of the year? Let me know. Put a yes if it's before the end of the year. Put a no if you think it's in 2024. Let me know down in the comments below. If you're not part of the Diamond Circle, get in now. It's the best place to catch additional content. I got some surprises for you guys over there. You don't want to miss it. Just click the link down below and you'll be able to join in very easily. If you guys want to catch me on X, it's @Paul Barron. Catch you next time right here on TechPath.